Darkstar copies all. Go ahead. Message to observer. Alpha 3 rounds. AT delay in effect. 3 guns. Bravo 2 rounds. 2 guns. Smoke on effect.
Hey guys, thanks for watching another video from the Options Millionaire Community, home of the best educational Discord out there, and a new partner of Bookmap, a fantastic tool that'll help you take your trading game to the next level. In this video, we're going to be going over June's play of the month. And why did I choose this play? Because, well, it yielded me 1,700%. I'm going to be going over the whys, hows, whens I took this play, why I elected to hold this position so long to get such a colossal win. And a lot of other people were to take advantage of this play, so it was a really special play to me because not only was I able to benefit from this play, but so many people in the community were able to yield highest gains of their career. And I wanted to really showcase this play and go over everything that made me take this trade. All right, to get started here, we have to jump back all the way to the beginning of the month. On June 2nd is actually when we entered the trade, and that is on this green candle right there. So we entered on June 2nd, the afternoon of June 2nd. If you see, in late May, we had this big run up until the upper 4,100 area. We started topping out at 4,150, and then we entered about a 7-day chop fest. 1, 2, 3, 4, 5, 6, 7-day chop fest right here, where we kind of bounced between 4,200 and 4,100. We all remember how strong 4,100 was. We kept bouncing right off of it. Every time we either hit 4,100 or dropped into 4,100, we immediately bounced back up into the 4,100 block and then went all the way back up to nearly 4,200 and just oscillated between for 7 days. Now, if you notice back in my charts, it fits the pattern. We've had a sell-off and then about 7 days of chop, sell-off, 7 days of chop, sell-off, and then we had this little chop here. We bounced back up. We had another 7-day chop, and then we had another move. And what I was looking at here is that this little rally off of lows was on pretty weak volume. In fact, the buyers never really stepped in all that aggressively. Every time we get some sort of buy up, we have a big spike in volume at some point. But here, the buying volume never really spiked. We had a big sell-off, and the buyers did obviously bring this up from 38.11 up to 4,200, which is about a 400-point move on very anemic volume. So that was the first thing I was looking at. The second thing was that I knew there was a sharp resistance at 4,200 that was going to be difficult to breach. Even indicated on Bookmap, which I'll show later, there was a larger level right at 4,200 that we just couldn't breach. We kept hitting it, bouncing off of it. In fact, the first time we actually hit it was on Memorial Day, which obviously the market was closed, and it was only futures trading on that morning of Memorial Day, and we actually popped 4,200 and immediately sold off like 70 points. And then the market closed early on Memorial Day and then opened up later on that night for the regular trading session, and we sold off from 4,200 down to about lower 4,000s. So we went from 4,207 all the way down here to 4070, which is about 130-point sell-off, and then we bought up, sold off, entered the chop session. On June 2nd, on the second test of 4,200, I elected to go ahead and jump into June 27th, 3750 puts. And I actually got two different fills, one in the $11 range and one in the $7 range. I built into the position for a net fill of $10.50 on this position. I got a fill here in the afternoon, approximately 2:45 Central Time, which is about 15 to 20 minutes prior to the bell, the closing bell. My thesis on this was that we were going to eventually fail 4,200 because the main event on June 10th, right here, the morning of June 10th at 8:30 Eastern Time, which is before the market opens, as we all know, CPI data was going to be released. I was expecting CPI to be elevated. The White House came out and said that expect CPI to be very elevated. The whole market was reeling from that, and they were expecting that. Plus, after this little pop here, I was expecting some more downside. And then obviously the day before CPI, we sold off that pre-market, and then CPI came out, we sold off again, and then again, all the way down here to the 3,700. So, but obviously I didn't know that at the time, and I held from June 2nd until June 9th here, electing to hang on to this position because I knew they were going to come on down. I took it a month out because I was building in some probability that could be wrong just in case, because I didn't want to take something too short dated. So I took that nice month expiration, which is pretty much a favorite of mine. I like taking the 30-day out plays on these type of potential moves because it builds in some time. Even amongst all this chop and even among all the green coming back up, I think the lowest I saw was only like 12 or 15 or 17% loss on these things, which is well within my bounds of risk tolerance for a position like this. If we were to breach 4,200, I probably would elect to close the position and then look at re-enter somewhere around 4,285, 4,300 because I knew the JPM collar was, one of the collars was pegged up at those levels. So if we were to reach up there, I would probably close and then look at re-entering a position on some downside if possible, or just reanalyzing. However, we never broke 4,200. We in fact started to tightly consolidate. The seller's volume started to really pick up, and then of course we had the big pre-market sell-off right before on June 9th and after hours, and then June 10th CPI data popped, and then of course we sold on off. Now the second reason I elected to hold on to this position is because I knew we had FOMC coming up on the 15th of June. Now we all know what happens on FOMC. We usually have some incredibly volatile action in addition to the CPI, so it was kind of like a 1-2 punch coming up. But the price action that we got coming down after CPI was very bearish. There was not really many buy-ups, very little bottom wicks here on the daily chart, and we had a significant uptick in selling volume. You see here, the seller stepped in and then absolutely went bonkers, producing one of the highest volume candles we've had on the daily since all the way back in January. So for me, a very strong indication that the buyers had really stepped in and smashed this thing and allowed me to hold this all the way down. I closed most of this position on the bottom of this candle with this little bottom wick here in June 13th. I closed most of it for about 850% profit, which is a fantastic profit. Most people like to do the same thing. Unbelievable profit for this type of position size, for this type of play. Yielded me well over 6 figures for this position overall. But there, I closed out some of the position here at 849%. But I elected to hold a small portion of this position size because I thought we did have more downside with FOMC, and I'd already paid for the trade. 849% took all of my risk out of the trade, and now I'm holding a couple of more contracts left just to see what would happen. We had FOMC. Obviously, we all know what happened in FOMC. It wasn't the real FOMC that we're used to seeing. Usually we get right after Jay Powell talks or right before he begins talking, we pick a direction and we absolutely smoke it, whether it be a sell-off or a buyout, 100-point buy-up, 100-point sell-off, we just go. That's not what happened on this FOMC. We did rally. Remember we had this big green buy-up about 80, 90 points, and then we chopped sideways, actually fell off a little bit and chopped sideways the entire time he talked. Started killing all the strangles that we had played, all the directional plays we had played, started smoking those with theta because one, implied volatility was probably the highest I've seen it in a very long time on SPX. It was over 148%, which is phenomenally high for SPX. And two, the market was chopping sideways after that big rally, and then the second that he stopped talking, finally the market rallied up to the top. But all in all, it was very weird FOMC action, so I still held the remainder of my 37.50 puts, even on this candle right here, because we rallied up to 38.46, which put him back out of the money. But still, with that weak action, I did not expect that to hold and that erratic action. And then two, it's pretty common for us to sell off the day after FOMC. I went back and looked. It's like after every green day on FOMC, it's pretty common for us to sell off. So I elected hold the remainder of those contracts. And then, of course, the next day, we absolutely smoked it. We sold off all of that weird action on FOMC that was erratic. The seller's volume stepped right back in, sold this thing all the way back off to 36.37, which allowed me to close for a 1,743% gain. It was the highest non-event percentage return of my career. I've had a lot of returns that are higher than that, but they were based on like event earnings and some sort of catalyst like that. But from terms of execution for price analysis, this is probably one of my favorite plays of my career, in addition to the fact that so many people in the community were able to benefit from such a large profit and change their accounts and change their years on one play, because I was able to turn a relatively small position size into a 6-figure profit, which was absolutely fantastic, which didn't take much. At a 1,700% win, it doesn't take much to turn into a 100% profit or a $100,000 trade. So fantastic trade. It was awesome to see this trade. I'm looking for the next trade, obviously. In addition to this one, I'm looking for a similar setup because I do think we have a lot more downside left in this market, left in the year, especially looking into this current setup here, June 24th. We've had this, I think, an 8% rally already, 36.39 up to 39.19 on virtually no volume. This past week, I think, was one of the more difficult weeks to trade in the entire year because of the erratic nature of the price action. On the daily chart, it looks pretty easy. It looks like it just went straight up, but obviously that's not what happened. There was a lot of erratic behavior, sideways chop. In fact, most of this day right here was absolutely sideways chop, and followed by about an hour of movement. So I'm looking for another downside action here because none of the macros have changed. We're still in a very dire situation here. I am looking for this to start basing, and then going into the end of June, early July, I will look for the final base, and then I'll put another similar position on there, probably somewhere in the realm of 35.50, 35.90 for about a month out, depending on where we are at the time for a similar position. Plus, by then we'll be dealing with July CPI, which will be another catalyst, and I do expect CPI then to be elevated as well, which will again force rate hikes from JPAL. But now that we've really looked at the charts here, I want to show you all Bookmap and what it looked like the day I took the trade. So here is the Bookmap software. This is what I use in addition to my trading. This is probably the best tool that I have for trading. It allows me to put together some fantastic exits. In fact, in May, I had a couple of 600 and 700% wins based on my exits on Bookmap. Because when you are on a trend day and you could see all the liquidity is posted one way, Bookmap really helps you identify that stuff, and it's allowed me to really target a particular price that I want to exit. One of the best tools I've ever added to my system. Obviously, I've got my system that I trade off of, but this is a tool that allows me to really refine my exits. And when you can use something to help you refine your exits, that is a phenomenal tool. And that's exactly what Bookmap does. It's a live liquidity tracker. It posts on live liquidity in the markets. Highly recommend it. If you want to be a part of Bookmap, by the way, I've got a link in the description of the video. It'll help you get some money off of your plan. But this is what it looked like moments before I took the position on June 2nd. You see that we had a phenomenal amount of liquidity pinned at 4,200. We'd already been failing 4,200 a couple of times. I knew it was going to be a very difficult from a macro, from a metrics, and from an order flow standpoint. There was a lot of action going on at 4,200 that I did not think we were going to pop. But that 4,200 level you see was a very considerable level here. I did not think it was going to break today at least, so I went ahead and took the first leg of this transaction. We never actually got up to that level because this was 2:30 Central Time, so this is 30 minutes before the market closes, when pretty much right where I took the first leg of this position. And then if you were to zoom out, I know we had a phenomenal amount of interest down here in the lower 4,000s, 40.60, and then even dropping further, they were starting to build in all this liquidity at 40.20, 4,000, and even lower. If we zoom out even lower, they started to build this position at 38.80 I was looking at. So they were definitely was an appetite to building liquidity much lower as opposed to higher, which really made me interested in the downside position that other larger big cats like the big money was starting to build in. And this is how I use it. I want to monitor what the big money's doing, and they allowed me to showcase that they were putting liquidity lower, which started to bolster my strategy even more. Allowed me to identify key moments on which I want to enter. So very crucial tool. I continue to monitor this throughout the week and then into CPI to really showcase where they wanted to go. And obviously it worked out really well. If you have any more questions about Bookmap or anything you've seen here today, please hit me up in the community. That's why I'm here. It's a fantastic resource. A lot of people are signing up for it. A lot of people love it because it's obviously allows us to make these kind of plays. They don't come very often. It's not very often you have a 1,700% gain, but man, when they happen, you strike while the iron's hot and you use tools to help you stay in the trade as long as you can. Anyways, that's all I got for y'all. An easy, quick breakdown of this trade. I hope you all learned something. If you have any more questions about that, please post a comment down in the description of the video. I'll answer it so everyone can read it and so you can get a little more clarity on what's going on here. If you want to be a part of Bookmap and see what it's all about, follow the link in the description of this video to get you some money off of one of your plans and to really learn how Bookmap works. If you want to come over and join the community and be a part of our educational Discord, first go down and join the New Options Millionaire website. Pick the plan, whatever you want. Come over and join the Discord. We do awesome daily streams. We have a couple of different tiers you can choose from depending on how invested you want to be. And we kind of go over everything. We are definitely an educational resource. We don't really focus too much on play calling. We focus more on education, talking about setups, price action, all these different strategies so we can make you a better trader in the long term. Thanks for taking the time to watch this video. Until next time, I am Andrew with the Options Millionaire Community, and I'm out.